Welcome back to another episode of Stock Talk. If you guys are new to my channel, welcome. My name is Julie. Today I want to talk to you guys about Palantir. Now, Palantir has been getting a lot of bad press lately, and it's currently down 71% from last year's high. So we can see on the chart that last year in in January and February, it was trading right around $38, $39, and it's currently down over 70% from that high. And year to date, if we take a look, we can see that the stock is also down over 43%. And today it's trading at around $10.48. Palantir reported earnings last week and the stock fell over 16% on that day alone. Per Motley's report, the company's revenue rose 34% year over year to $433 million, which actually beat the analyst expectations by $15 million. But the net loss was actually much wider than expected. They were expecting $148 million and they came in at $156 million. On a general accepted accounting principle basis, while its non-GAAP earnings of 2 cents per share missed the consensus of forecast by 2 cents. But I'm not here today to talk to you guys about their earnings report because I'm sure you guys already read about it. Instead, I want to just talk to you guys about the stock and see if it makes sense to pick up some shares at this current price point or if you should Palantir be. So first, let's go ahead and take a look at their current revenue growth. So in 2021, Palantir generated 57% of its revenue growth from government clients and 41% of its revenue growth from commercial clients. And here's how rapidly those two core businesses grew in 2020 and throughout 2021. So we can see in 2020, we had a 77% growth from the government. In Q1, we had a 76% growth. In Q2, we had a 66% growth. In Q3, a 34% growth, and only a 26% growth in Q4. Now, on the commercial side, we had a total of 22% growth revenue of 2020. And if you guys remember back when they IPO'd in September of 2020, there was a lot of critics that were doubting that they could actually expand their commercial side. So taking a look at 2021, we can see they had a revenue growth of 19%, then in Q2 a 28%, and in Q3 37%, and in Q4 a 47%. So we can actually see that they have grown their commercial revenue growth over the quarters. So we can see that throughout 2021, it has signed several domestic deals, which brings me to today's news. So this morning, the CDC announced that it has rewarded Palantir Technologies with a $5.3 million contract to manage distribution of COVID-19 drugs in the United States. The contract for supporting distribution of therapeutics is for a duration of 6 months. And we can see, unfortunately, this did not help the stock out this morning, so we still had a plunge, but I think that's also due to the overall condition of the markets going on right now. So even though we had this great news for Palantir, we didn't see a lot of movement going on, and I do think it's partially due to what's going on over in Ukraine, which is bringing fear to the markets. And in the short term, I do see that we're probably going to have a lot of volatility continuing, especially since a lot of retail traders were trading the stock and are still trading the stock. But I believe that Palantir was one of the stocks that actually got stuck into the hype stocks last year, and therefore went up way too high, way too fast. And now it's kind of paying the price for it. And which is why we've seen the decline since last year of over 70%. But if you guys are looking to holding Palantir for the long haul, I think this is a great opportunity for you guys to get into the stock for cheap, especially since they are focusing on expanding their commercial business. In early 21, the company actually announced a strategic partnerships with IBM and Amazon's cloud's business, Amazon Web Services, and investors can see these alliances are beginning to bear fruit. So the company's US commercial customer count quadrupled from 17 at the end of 2020 to 80 by the end of 21. When accounting for international customers, Palantir's private sector customer count increased over 200% from 49 total commercial customers in 2020 to 147 in 2021. And probably what's going to be more encouraging than growing its commercial revenue is their ability to actually retain their current customers. For the first time since it became a public company, Palantir disclosed its net dollar retention rate. And for the commercial business, the company's net dollar retention was 113%. Since this is over 100%, it implies that the company is expanding this segment. So again, in the short term, I don't see the stock making any huge movements. If it would have made a movement, it would have been today. However, I do believe that if you guys are patient and are in this for the long haul, that you're going to be rewarded. All I'm going to say is take a look at where AMD was trading about 5 or 6 years ago and where it is trading now. And of course, I'm not comparing Palantir as a company to AMD. However, I like to use AMD's chart as a reference to show you guys what can happen when you guys are actually patient and actually hold a company for the long haul and let the company naturally grow. So I hope you guys got something out of this video. If you did, please be sure to hit the like button and subscribe to my channel. And let me know what you guys think about Palantir, if you guys are thinking about trading the stock, or if you guys are thinking that you don't want to get involved in Palantir anymore and leaving it alone. So let me know in the comments below. And I'll see you guys in my next video. Until then, bye-bye.